This is really bright. Minimize this, minimize that. It's really, really bright on my eyes. All right, let's make sure our volume's on. All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Thursday, December 15th. Only 10 more days until Christmas. Happy Thursday, everybody. Welcome aboard. All right, we got a lot to get to today. We had the Federal Reserve rate decision yesterday. 50 basis points was the rate increase. They also said that September would show rate hikes based on their dot plot. We're going to go over that dot plot together. I'm going to go a little bit over on the Fed this morning. But let's go ahead and first go over the round the horn in the Dow. Dow's down 361 points. NASDAQ down 1.5%. S&P up, down 1.32%. Same as Russell, pretty much down across the board on futures as they were sold off pretty much right at overnight at the London Open. So again, Europe and sold it out. Not really Asia this time, mostly Europe. They did have rate hikes as well. I think we had 50 basis points in the Bank of England. That's the BOE. We also had a rate increase with the euro. The European Central Bank also raised, let me get that number for you. Hikes rates see significant increases ahead as announced to plan to shrink balance sheet. ECB raises another 50 basis points. That is at expected as well. So again, a lot of news came in. So here's some other news that came in as well. We also had retail sales. Retail sales fell 0.6% month over month in the month of November, but was a month over month. But in November, it was still up 6.5% year over year. So again, that was reaffirmed in terms of that. Month over month, 0.6% minus 0.2%. So again, we still have a 6.5% year over year in terms of retail sales. We strip out CPI, it's pretty much red. So again, demand is waning. And again, this is important because if demand is waning, that is deflationary. But again, we talked about how inflation has peaked around June. Right now, the Fed is looking at the data, possibly lag data. I'm not sure. I agree with the 50 basis point hike. There could have been 25. There could have been a pause. It could have been anything. But a 50 basis point hike, I don't think we have a meeting in January. I'm not really sure. Let me go ahead and check that. I'll go and take a look here at January 2023. They do not have a meeting in January, but they do have a meeting in February. So maybe this, we have February. Do we have one? I'm trying to look for FOMC. Yes, we do have one on February 1st, but not in January that I see. I just want to make sure that I'm correct here. So we got a 50 basis point hike with no meeting in January. Keep in mind, remember, we didn't have a meeting in October, or was it September? If my memory serves me correct. When we're going to go and make sure of that. We did not have one in October, did we? FOMC, no, we did not have one in October, and we raised in September 75. So a lot of people said, well, is that really a 75 because there's none in October, and then we raised in November another 75. Let's see here if that was the case. FOMC, yep, that was raised 75, and then today we have 50. Yesterday we had 50. So at least in the schematic of the market in regards to the Fed, we are getting less and less hikes. I mean, this one would technically be the first pivot. To me, a pivot, and I said this back in August when we had that bear market rally, I go, that wasn't a pivot. Again, that was just talk until it's done. So technically, we are easing on rate hikes. So that's something to kind of hang your hat on. But Powell was pretty hawkish in his tone in regards to the future. Again, I think what Powell, again, I can only say my opinion. What I think Powell is trying to do is wring out all the speculation, all the easing financial conditions we got in October, November, the slowing inflation. You can see the labor market still getting strong. Again, guys, the pressure is not just from goods that's done with. It's all labor pressure. Basically, the Fed Chair Powell and the Fed is saying, is that we want you to lose your job, blow through your savings so we can have a grand reset of the excess of 2020 and 2021, whether it be fraud, whether it be what is it, FX company, the one Freed Brinkman, whatever, FTX. That's an indication, or usually the wringing out of speculation when liquidity dries out, and liquidity is dry, hence the chop that we're getting. I want to lead that to the S&P 500 again. Again, I know my favorite chart to look at, and again, based on just what happened. Again, we had a CPI number that overshot, and then it came back down basically to break even, back to where we were. You go to FTX, Silish. I forget the name. There's so many FX now. You got Binance, FTX. Again, I'm a Coinbase guy. That's what I use to buy crypto. I never even used FTX in my life. All I remember with FTX, to be completely honest with you, is going to the arena in Miami. That's really it. But yeah, Blankfriend, Freed, whatever his name is, yeah, he was arrested. Yeah, again, those are signs of excesses. We had the Bernie Madoffs, we had those hedge fund managers like an Alan Stanford. Silish, not to laugh at someone's misfortune, but the thing is that throughout history, in the stock market and through the economy, we've had this. Alan Stanford, same thing. He had a hedge fund that blew up. You had Bernie Madoff. How many hedge funds were blown up right at 2000 and 2008? That's happened. You have the PPP frauds in 2020, 2021. Then you had the FTX blowups, the Winklevoss. I don't know if they're blown up or whatever. Binance. I don't know. A lot of rumors out there. This is what happens when you have unregulated markets. It just happens this way. It just goes wild. And then this is the restriction, or the kind of the same, taking the punch bowl away from the system, taking away that liquidity so it kind of wrings out the excess and gets prices moderated. The issue is that prices have moderated, at least in goods, but in services, again, that's labor intensive. That's why inflation is going down, but again, maybe not at the point where the Fed is completely content. Take a look at crude oil, down 1.5%. There was some ugly China news overnight, some data dump, but you're talking about industrial production, retail sales were missed more than expectations. Take a look on Twitter. I tweeted all those headlines. There's so many. Gasoline futures down 1.69%. Gold is down. You would think, oh, but Carlos, gold is the safety thing. It's all in the dollar. It's all in the dollar. But again, gold bounced pretty nicely the last 2 months. Thank you to the dollar as well. 2.5% down for silver. Let's take a look at copper, down 1% as well. Euro dollar, 106.93. Interesting, right? With the ECB, and we talked about how the euro dollar and S&P was kind of correlated. We had that trend line break. Now you're starting to get a little bit of decouple from SPX and the euro dollar. So that's the big change there, at least on the decoupling front. Dollar yen, 136.35, up 88 pips there. And the pound dollar does not care about the rate hike from the BOE. That is down 105 pips. Bitcoin futures, 17,000. We cracked 18,000 yesterday in the morning, pre-Fed. 17,490 is where we are. We still hover around that 17,000 level. Just the volumes, I'm assuming, are dropping to that point where you're just not getting a lot of trading volume in an environment for crypto, which is high return, high risk, when everyone is trying to reduce speculation or trying to hoard money. That's what happens when you have rising rates, because you're getting paid more for your savings. It's a whole thing. But again, the punch bowl is being removed. The high yielding assets from before are not working this time because of the restrictive financial monetary policy. But again, you have the names like the value names in the Dow. Again, Procter and Gamble's, the packaged foods, all those names are doing well because they're consistent with their dividend payout. Who knows if they're going to go ahead and increase payout as layoffs continue. Again, I haven't seen anything new in regards to the layoff front. We did have an unemployment claims number that was better than expected as well. So again, it's a little choppy. The labor market's kind of choppy, kind of like the S&P. You could see just that trend line and that channel holding up. Could it break? Absolutely. And if it does, 3,900 is your next level. But if you look at the whole totality of everything, we're kind of stuck between 4,150 on that wick and 3,900. Really, that's your support. But again, that trend line's still holding up. It's still above the 200 on the 4-hour basis. But other than that, if you're bringing up the daily, again, you could see now we're below that momentum indicator of the 20-day, which I talked about on the reel yesterday. But again, still holding that trend line. I mean, I had some calls this week and not helping. Even if you did shorts, it was tough unless you did it right before the Fed. But again, a choppy week, been a choppy month, kind of just range bound back and forth, back and forth. Take a look at the VIX. You got a gap to fill here at the bottom at around 1912, but again, still really hovering around 21, which is not exactly fearful, but we did spike at 25 when we had that nice flush, but then we came back down. You could see as the volatility index is not showing much fear currently. Let's take a look at the dollar. And again, the dollar has really been the barometer for the stock market since stocks are priced in dollars. And again, you could see it's red. I mean, even that's not even believing Powell at this point. So with that being said, again, you could see yields are down, dollars down, but the stock market is down. There's some talk on Twitter that people were saying that because of Elon Musk selling of Tesla. I talked about that on Twitter. We broke that 200-day on the moving, 200 MA on the weekly. Again, I said Elon was probably selling. Who knows if he's actually done? Again, if you are a Tesla shareholder now, you are now beholden to Twitter. And Twitter's private. We don't know their books. They're not public anymore. So it's very difficult. Who knows what happens with Tesla today? Could it continue further? Is it hurting growth? Is it hurting NASDAQ? Yeah, of course. I wouldn't say it's all Tesla, but again, this is not helping. I think Elon Musk cashing about $3.2 billion worth of shares. But again, that's his liquidity. That's what the money he's going to use. He also has margin debt on that $44 billion to acquire Twitter. So if you're a Tesla shareholder, you now have a vested interest in a sense in Twitter. Again, I own Tesla with ETFs, of course. 5G, been a shareholder, made money on Tesla many times. But again, it's a tough one to defend here because again, unless you love Twitter and we don't know if it makes money, they're laying off people. You're just adding more pressure to a company that is doing well, at least based on their numbers, that is unneeded. So, I mean, who knows what happens in the future in terms of Tesla? If it was up to me, I think Elon Musk should step down as the CEO of one of the companies, whether it be Tesla or Twitter. Again, he already has SpaceX under his plate, and it's kind of different. Listen, unless the man is a cyborg that I don't know about, again, this looks like it's just way too much, and it's blown up in his face, unfortunately. And again, that's just an opinion. Who knows what happens? Again, I have Twitter. I use Twitter for you guys. I'm verified due to the paying for the Twitter Blue, Yippee, whatever, $8 a month. So you know it's us. But in terms as a Tesla shareholder, it's not a good feeling to see that he has to pay, within a sense, the shareholder money for a project, or who knows what the turnaround is on Twitter. Now, for all we know, he kind of gets it right on Twitter. Twitter soars and Twitter becomes a kind of a peer. I wouldn't consider them a peer of Facebook, maybe in terms of daily active users. You never know. I mean, Musk does have magic. Look what he did with Tesla, and who knows if maybe he has the secret sauce to get Twitter back to where it's at. All right, back to it. Back to the S&P 500 level. Again, here's the daily. Let me see if I can bring up a 4-hour. Let's go back to the Fed and frustration station, which is actually what we're looking at. Let's go and bring up the dot plots for the Fed. And again, this is something that people need to understand. Dot plots are not projections, and the Fed has gotten it wrong consistently, and that's a problem because now they're looking at data that seems to be it's probably lagged at this point. So let's go ahead and go back in time to 2021, last year, when the Fed said inflation is transitory. We're nowhere near a 2% inflation target. We don't expect many rate hikes. Here was their dot plot for 2022. Really, they thought they were going to get to 1% Fed funds rate. Look at the date. This is directly from the Federal Reserve website. Again, that was their forecast. Here's their forecast now. You're talking about 4.5 points above what their target was just for 2021 and 2022, excuse me. So again, they expect that it stays consistent after we're going to raise a bit more, probably about 1.5 points. They also added the September hike as well. That was not priced in, hence the price action that we got yesterday. And then they expect us to stay within the range of 5.5 to around 3, and then slowly but surely get back down to 2. Guys, bottom line is that the United States cannot handle the debt load that it currently has. We are rising rates in 2007 levels with double the debt. Again, it gets to the point of servicing. So probably thinking to yourself, guys, are we going to get a recession? Guys, we are in one, technically. We've been in one based on GDP. So that's That's not wrong. Are we going to get a severe recession? Are we going to get a soft landing? Remember, 75 basis points. We've had that continuously. We don't have a rate hike in January. We had 50 basis point December, less than expected. I still think the Fed is wrong. I still think the Fed changes their tune. Why do I say that? Because they've been wrong pretty consistently with their dot plots. In 2019, they said they were going to raise rates. That did not happen. They actually cut rates in 2019. You remember in 2018 when we had the rate hikes in December, where we had that big flush in December 2019, right away, Powell cut rates. And he even said it yesterday, and I was watching the transcript, reading the transcript. He said, if things change, of course, our monetary policy will change, our fiscal monetary policy will change with it. So it's kind of like he's hedging his bets here, kind of wringing out the excess, which I completely understand. But the dollar, I don't see that really believing him. If that was the case, the dollar should have gone higher. Yields should go higher too. The problem is that our yields pricing in a recession here, or a severe recession. And again, that's why I still like bonds to the long side. Again, TLT is a great place, in my opinion, to go to. I think we get to 119.51. Provides interest rate income at least. I don't have a position in it just for the fact that I don't think I'm standing to make $11 on this position right now on TLT to really do much on it. But again, you still have some upside there if we expect rates to fall further, and I do. I think TLT does go higher. Remember, bonds bottom before stocks. All right, let's do it. Laughing at Friedman. AMD support level. Let's answer it. Okay. Tough week this week, guys. I like to be upfront with you. I had a mess up on a trade yesterday on SPY. It doesn't really matter because now it's down, but here we are. 66.23, you have the 50-day moving average on the daily, and you have a gap to fill at 63.14, Jimmy. So again, keep that in mind there. 66 being your big one. We're slightly above that on AMD, so not really much to do here. Here's the really worst part, and this is why I put frustration station on the subject line. We have OPEX tomorrow, and for all we know, this could be bought tomorrow. That's the really tough part. Now you're just like, God, what do we do now? Again, I'm still above the 100. I'm right near the 20. I'm on that trend line on the daily. We've been kind of bouncing off it pretty consistently since October, November, the earlier December. It's really just watching, not this time. And that's why it's so frustrating, because it's not bullish to make calls because I haven't been hitting them. And it's not bearish enough to do puts either, because I did puts as well and I got hit. So, I mean, that's why it's frustration station. This has not been easy, at least the last couple of days, but this is the hits you take, and you keep moving forward, and you kind of keep your risk in check. You're looking to see the whole macro and see where everything goes, and you go from there. But again, SPY-G Thursday is today, so that's nice. Let's see. Is it a good time to buy banks now? SBNY. Let's take a look at those banks. Did get took a hit lately. You can see now we're starting to hit some, or start breaking some support here at the 2-year. I still like banks as well. Trust me, I do. I really do. I own JPM and Goldman Sachs. There's no gap to fill here, but I think the magic number you're really looking at is right around $100 a share. SBNY is Signature Bank. I've never heard of them, but let's go ahead and go to the mega caps to kind of see. So XLF is holding off a little better, more than that name. So maybe you want to stick to the big money center banks. Maybe that SBNY is a little more of the, I don't know much about them, maybe a little more high beta and a little more growthy, let's just call it. But again, you get to see the banks here. XLF on a 3-year weekly basis, double bottom here, kind of a triple top. Do we go ahead and break out? Again, frustration station. Welcome to it. Take a look at the 2-year basis, same thing. The only thing, I guess, the only respite you see here is that at least you're starting to see, at least on a wick basis, a little bit of a move higher. That's right. At least the resistance points on the triple top, at least for now, is starting to creep up a little higher. The last time we had anything near that, a triple top, we did sink a little bit and came up a little higher. So you can see it right here, kind of very similar on XLF, where you had this triple top and then you spike down. Maybe we get to around 33 or so, and then we continue higher. So that's pretty much the only thing on the banks that shows some kind of hopium or some positivity there. Really just on a technical basis. But again, rates going down does not help banks either. Again, they do like higher rates, higher interest income. Yeah, super chop, Henry. I'm living it. I'm red in positions. Luckily, on Monday, I caught SPY with Masterclass, so that did help. But again, it just ugly chop. Really, again, mid-month is really when the Santa rally happens. And again, this is historically speaking. Again, I can't guarantee anything. I wish I could, guys. If I could guarantee anything, and I knew something about the future, I just give you the lotto numbers at that point. But right now, it's just staying within that range. So again, I'm going to kind of sit back and just watch. Remember, OPEX is tomorrow. That's options expiry, the last one of the year. So who knows what the hell we get. So again, we're going to watch the VIX carefully. We're going to watch the dollar carefully. We're going to watch the rates carefully. And of course, S&P 500, keep an eye on Tesla as well. Could see more weakness to the downside. But you know what? At this point, I wouldn't be surprised if the bids start coming in for that stock as people want to go ahead and buy at levels they have not seen since October of 2020. All right, guys, appreciate it. As always, have a great rest of your morning. I will see you guys tomorrow for the morning note. I love doing these for you guys. Please hit that like button if you do like these videos. Sometimes I feel like in terms of timing, a morning note sounds better than an afternoon note or a midday note. I understand. But let me know if anything you would like to see more videos. Again, this channel is for you guys, really all 23 of y'all. That's the only reason I do it, for you guys. Go ahead and type in the comment section if there's anything I can do, maybe add more videos or a little more in depth into other things that I can do to help you guys out. I'd really appreciate it as always. Have a great Thursday. We'll see you tomorrow.